Economic boom or doom? Scrutinizing the 2023 Q4 GDP numbers under Bidenomics. Hello, this is Chart GPT today. So we're going to get into those GDP prints that we just come out with, the flash estimates coming out for the fourth quarter in 2023. Now I know some people think, well, okay, you're being a little bit hard on Biden here and his Bidenomics. So look at the stock market; it's hitting all-time highs. Well, you think you got to remember, one number doesn't tell you the whole story. Yes, the stock market is going to hit high, and it's going to go significantly higher because of the debasement of the currency. So, stock markets are one of the best hedges against inflation. So that's telling you about inflation, not necessarily telling you about the economy. You have to look at other factors to really understand that. So that's kind of a misleading comic strip there. So Nobel laureate Paul Krugman says that it isn't a Goldilocks economy. It's even better thanks to strong growth and cooling inflation. Or they're cooking the books or on the Titanic. Let's get into it and find out who's right here. First of all, here's the GDP number is 3.3 for the fourth quarter from the 4.9 in Q3. But that being said, it is still on the down path, even though it's had the last two quarters been good. We'll see if that continues. My guess is it'll stabilize in here for other reasons. We'll get into that towards the end of this video here. Here's another way to look at the number. You can see that it's pretty flat and it's pretty consistent here. It's not really going up or down. It's going pretty much in stagflation mode. But here's the key chart I want to look at here. So the question is this sustainable? So the Q4 GDP is up to 27.93. That's kind of the raw number. So it went up 329 billion. So we're making more money than we've ever made, right? However, and those are inflation adjusted number. However, the US deficit is up more than 50 cents the previous quarter, up 510 billion. And in the same period, the US public debt is, in the same 3-month period, is up 834 billion. So we put onto the debt, both public and private, 1.344 trillion of new debt, and we only gained 329 billion in GDP benefit. So is that sustainable? Most people would say that that's not sustainable for just one reason alone. And you can take a look at here. Our interest payments are up over $1 trillion now. The Fed kind of put out this recent study here. You can go to the Fed and find that out yourself. So we're at $1 trillion. Kind of a dog leg up. You know, is that just an accident, or are they pumping the economy for the political season? My guess is that this is a very unsustainable curve, and they're just pumping the economy. Take a look at the AI, and it kind of gives you what its opinion is, whether this is a sustainable business model. I kind of plugged the numbers in and asked it, and it wasn't very positive about the model either. So we have a situation where we have an induced boom here, only to go into some kind of a doom situation perhaps later on. Give us your opinion. Is this business model of Bidenomics sustainable or not? Check out the post link in the description box below, and don't forget to subscribe.